technical issues with the screen share here and have that resolved. But on last Monday, here we were. I said look for a reflex rally into the Fed. I was looking for 99.5. We almost got there. Had people positioned on the long side of US dollar yen coming out of a falling wedge as a proxy for the long dollar. Talked about even the 3 drive in euro, and the euro could pull back to 108, 107.50. So far 108 is held. So for now, this call, it was all predicated on this top call that I made about 3 weeks ago on the ECB, that we could get a rally. I said, do not get long the dollar into the Fed. That's what everyone's looking to do. And it could end up being a buy the rumor, sell the fact, which is exactly what manifested. Of course, it wasn't on the Fed. It was the day after. So there was Thursday, Friday, and here we are Monday. So I'm not ruling out that this could be A and we get a pullback and then one more push up. But I think the most unexpected event in the FX markets this year would be for a 20–30% in the decline in the dollar down towards the 70 level. You'll know it's beginning in earnest once we close back under 97, which was a breakout level at 97. A lot of people looking for 96.50. But I would say with the intelligence gathering that I do, that the majority of market participants are looking for a resumption of the dollar uptrend, of the dollar bull market. And when everyone's leaning one way, I'm open to the possibility that this trend could be changing. We've got the beginnings of it right in here. And do not trade aggressively during this thin holiday trading. We'll be closed for Christmas, and then you have the New Year's week. And just a little lesson that I'd like to pass on to you, that the markets will be here after the new year. And in fact, the first week or so of the new year can give you market messages as far as direction for the quarter and the year. So now's a good time to go back and reflect on the year of your trading, see how you've progressed, take a look at your mistakes. We learn a lot from those, and recharge your battery. Sometimes it's good to be out of the markets to see the forest from the trees, and this is a pretty illiquid time to be very aggressive. A lot of the liquidity is out of it, but a chart is a chart is a chart, and so far I have to say this call for the dollar top and then saying that we would get another failing rally is manifesting. So the path of least resistance to me right now looks down in the dollar. It's going to take closes back over par for me to change my tune. Again, we could have A, B, C, and another failing rally up towards here, or we could just melt into the 96.5 if we get a quality. This was pretty close to 300 points or so. So from here, this could take us down to 96.50, 96 going into the end of the year. So 2 for 2 recently, the dollar top, and I said, if you missed it, don't worry about it. There'll be another chance. Even had people positioned for this pop in the dollar visa US dollar yen. And if it was your poison to be short the euro, that worked out for you pretty good too. I'm still looking for 112.50 in the euro before the potential of a resumption of the downtrend happens. So give me a Y if you understand my analysis of the dollar, that this was just a failing rally and we could be about to resume this corrective process to the downside towards 96.5 to 96. Give me a Y if you're with me. What means you understand and you get it. So the story of the year, the collapse in the crude market. It's my view that there's a possibility, maybe another dollar or so lower of a turn. I'd be very careful jumping on the bearish crude bandwagon here. Let's take a look at Feb. I think there could be a $5 short covering rally that could happen in a heartbeat. I think we're getting closer. I'm looking for some type of spike. Also today, something to be aware of is the winter solstice. And I'm not an expert on GAN analysis, but I know enough about GAN to be dangerous. And he believed that there were potential reversals at the end of each season to be alert for. So one of the alerts for me is going to be crude, maybe down here around 34 in the coming days, which I think could set up a correction in USD CAD. Unanimous opinion on USD CAD. We achieved the targets I talked about up towards 140. We have a potential third drive setting up. I'll get there soon. So potentially some type of low for a corrective retrace rally back to at least 42 that could set up a USD CAD top for a pullback. So I correlate US dollar CAD with the crude oil market. Give me a Y if you're with me. I think it's late to be long Canada. I think it's late to be short crude and looking for turning points in the next week or so, possibly even this week. I try not to make too much out of turning points this time of year, but we have to be alert to it. And I do believe that a bear market rally that might be spurred by some geo event. No one talks about the possibility of what's happening in the Middle East. We're now bombing infrastructure to deny ISIS of oil revenue. And if ISIS wanted to have an effect on the oil market, all they have to do is make a move into southern Iraq. Basra is the hub of oil production in Iraq, and they can definitely create more uncertainty about supply if they made a military move in that direction. I'm not predicting this event. I'm not Nostradamus, but you don't hear anyone talking about the risk of higher oil. It reminds me a lot of how the euro looked when I was talking about it at 105 before this recent bounce. You couldn't find anyone talking about where the euro could go to on the upside. It was all about downside targets, and the crude market is now in that same position. $30 crude, $20 crude, even hearing $10 crude, which I think sentiment-wise sets it up for rip your face off short squeeze in the coming weeks, so be aware of that. And then I'll show you the setup in USD CAD when we get to it. So give me a Y if you understand the crude and Canada analysis. Gold is taking advantage of the weak dollar and pushing up. Now looks like it can make a move with a weaker dollar, maybe back towards 1180, 1200. Also gave a buy point in Aussie based on that at the 71 level. And so far that's held in Aussie. So down here, it looked like we were going to negate it, but now the gold looks set up for 1110, 1120. And I know many people that are saying that we're going to look back at these 1050 levels as a very significant low for years to come. For me, I take it a bit more of a step at a time, and we had a huge break from 1190, $150 break, so why not halfway back? Would take you up to 1115, 1120. So that should still be constructive for Aussie. Aussie's been holding up. We'll get to Aussie, but the gold market is supportive of potentially the Aussie. Give me a Y if you're with me. The yen did break down. I'm looking for lower levels. Had people long looking for above a stop hunt above 122.5. The BOJ really helped the trade out and added another 100 pips to the upside in the yen, but my bias was to short the yen. Last week, thought we might make a move up towards 24, and we stopped about the 23.60 level. Yen still looks vulnerable. And the other big trade I've been talking about for the last month or so has been the short side of Guppy. I've been talking about a 181 180 target in the guppy for the last month or so, and we're now there. I'm going to show you a macro chart of the guppy that projects much, much, much lower. So if there's any kind of rally, we'll be looking to take advantage of it. And lastly, here's the S&Ps that sold off pretty dramatically. Again, lower dollar, lower S&Ps. So perhaps the S&Ps are not done after the big slaughter we had last week. I think it's potentially we could have 1930 and almost set up for the potential of even a little mini crash down towards under 1900 to 1800. If they wanted to pull a bear raid, they had a chance at one point. The S&Ps were up well over 18 handles today and have faded, so breakdown here. This too is in line with a weaker dollar to come in the following days. Give me a Y if you're with me. Also sets up further downside in US dollar yen, which I also correlate with the Treasury market. Actually, the Treasury market is higher today than it was the day the Fed made its historic move of lifting rates up. So here was the Fed, and the bonds have recovered. So still looking for more downside in US dollar yen. Some long-term channels are going to be challenged here in the next week. Does anyone have a question on any of our outside markets? On this quiet, fairly huge price action in equities, not much in currencies on this pre-Christmas Monday. Any questions? Okay, with that being said, let's move on to our individual instruments. I always start off with Euro USD. So when I was with you guys Monday, I said we had a little three-drive pattern. We could pull back to this line, which we did, took it out a little bit. Still my view that even if the dollar does recover again, that this 107.50 level should hold. I still think there's potential for us to rally up towards this 112 level, which would only be checking the breakdown of the euro on the daily chart, would take us up towards 112. Could we get one more pullback to take out these stops? It's looking less likely. We had a nice divergence into the Fed, and we had this nice rally here, and then everyone said, okay, the dollar's on its way back to parity, but held the 108 level. So a bit of a two-sided market, but my bias is to the upside in euro. Currently flat, looking for setups, but I did take advantage of dollar weakness on the short side of yen and took advantage of it in the Dixie. So right now, looking at the euro, everyone's saying that parity is a gimme. The only short-term bearish case I could come up with is this is A, and we get a B, and we get one more pullback. But to me, these lines intersect at 112, and I would favor buying breaks in the Euro USD. So just like I said, that the dollar would rally into the Fed, we should get a pullback in euro. Here we go. We got the pullback, held above a lot of moving averages. Looks constructive to me. Euro pound, I talked about the euro pound quite some time ago down here on the weekly, that we could have a right shoulder, and we're headed up towards a 74.5. I mean, euro pound right now is getting a little bit stretched, overvalued. Perhaps we head up towards a 73.80 level, but I've been recommending from our longs at 71. People booking profits in here. I want to get a feel for it into the new year, but was definitely a good call down here. Perhaps we get some kind of pullback to 71.70 on the euro pound. So I would favor not shorting it, but getting out of longs and looking for pullbacks down towards 71.80 in the days to follow into the new year. Some type of fib retrace. We've come a long way. We're still not up at this neckline that comes in at 74, but a real nice wave that's now beginning to grind and wedge So my bias is for eventually a pullback in the euro pound under the 72 handle. Let's just take a quick look at some fibs on this recent rally. See if we have some confluence with some moving averages. So all the way up here, I said the euro was the preferred long and the pound was the preferred short. So now that we're getting to the end of the first run, that may change for a while where the pound actually shows a little bit more relative strength. So assuming we're close to the high here, our 50% retrace comes in right around the 71.5 level. 61.8 deeper, about 71.20. I think that's a possibility in the days to come, looking for a pullback in euro pound. Give me Y if you're with me. So we were short the pound from the 3 drive formation that we had right up here. And that was another reason why we capitalized on euro pound. So pound demonstrating much more weakness than the euro. There's a 4-hour pound. And here's a 4-hour euro. They look like two different markets. Pound pressing these lows, euro way above it. So perhaps we have a correction of this trend where there's a little more resilience in the pound than the euro in the days to come. Give me a Y. Still believe that the pound could make a move towards this 147 level, something I talked about a while ago. Still looks heavy to me. We are starting to get some divergences on the daily. None yet on the 4-hour. So still could be lower lows towards 48.47 before a reflex rally in the pound. Give me a Y if you're with me. So this was a great trade. I'll show you exactly where we were a week ago Monday. I was showing this falling wedge in US dollar yen. We were on this candle. I said you could buy the yen looking for a breakout of a falling wedge to take us above this high for a stop hunt. That's exactly what we got. So this was a very nice trade from the 120.30 level. You should have been able to pull out at least 200 pips above my target. Was a stop hunt right in here. This was a BOJ. So I was saying I was looking to be a seller in the end after this pop. It did exceed my expectations on the BOJ. But to me, this is really starting to look heavy. In the US dollar yen, perhaps we get some type of bounce here as well. With the daily really starting to look heavy, we start taking out 120.30 and we have much lower targets ahead. It was my contention that there's a possibility of this being a head and shoulders top. In the end, here's your left shoulder, here's your head, here's your right shoulder. So while the dollar index continued to make new highs, we continued to get lower highs. In the end, here was the first one. Here's the second one. I think that we're on our way down towards major support at 18.5. And then possibly this 116 level is going to be very significant. We break through 116. You're talking about the possibility of 105 in the end. So I remain negative the yen against the highs that we had on the BOJ, looking for flash crash lows to be retested again down here. Give me a Y if you're with me. This too, part of the negative bias in the yen. Now, of course, because I was constructive euro pound, I pounded the table like this. Do not short the euro yen. It would have worked, but I said your preferred short was the guppy, because the pound was your preferred short because of euro pound being in an uptrend. Voila, the guppy. Talked about shorts in the 185.5 level, looking for 180. Here we were. I showed this old support as new resistance, talked about it up here. Said that we were going to head towards the 180 level, and we're manifesting right here. So I want to give you a big picture on this now, and I'm sure there are a lot of people looking for an important low here. I actually would love a rally back to 82, but the way this is looking to me is that we're setting up a descending triangle, or this was a right shoulder, next target down around 177. But if I just give you a look at this, let's look at this level right here. Okay. And then let's draw a downtrend line. I know it's a little busy here, but let's go here. Anyone know what this formation is called with a flat bottom and a descending line? Going once, going twice, it's a descending triangle. So here's your descending triangle line right here. We're sitting here on a possible failure. If you want to be conservative, this was 188. This will give you 172, 174. And if you want to be aggressive, and I mean aggressive, you could go from the high all the way up here, call it 96, and that gives you 164. So I think there's a possibility in 2016 that the guppy makes a massive move to the downside towards 164. There'll be lots of stops along the way, but this is something that I made you aware of up in here and again in here. And now we're on the verge of a major breakdown. I view this as a very good shorting opportunity. The only thing that would change my mind would be closes back over the 85 level. So what you want to do now is look for some retraces. We're getting some divergences here. So my selling points could be between 82 and 83, looking for much lower levels. If you want to play a counter trend, there could be something cute setting up here for a 3 drive to a bottom formation to get this rally back towards this 82, 82 and a half level. Here's drive 1, here's drive 2, here's drive 3. So we have a little bit of divergence happening here. You got higher lows here, and then you have this little 3 drive here. Trade it light because we're in this holiday trading period, but set up for some type of recovery rally. I wouldn't look for a lot. I'd be happy with some type of retrace back to 81 and a half, and possibly old support becomes new resistance, and that's right around here. Okay. Oops. Try it one more time. Right here. So back towards this low right there, that's 82.20. So here's your short-term picture. I'd be covering shorts, looking for rallies. You want to trade a counter trend. We could get back to previous resistance right up around 82, but projecting on a longer-term basis on the daily, you have a nice descending triangle, and measured moves are quite a bit lower on the guppy. Give me a Y if you're with me. Euro yen coming off as well. Doesn't act great. I thought we'd get one more high. As you could tell, the bigger payoff obviously was in the guppy. Here's your 4-hour guppy. So getting the euro pound right helped you get the guppy right, which was a much bigger short than the euro yen. Again, still holding these lows. Guppy blowing through them. Give me a Y if you're with me on the crosses. So let's take a quick look at the Aussie here. I had a 71.5 return line down here. Perhaps we could still work it. But to me, the Aussie's getting the look of an ascending triangle. So to me, it's very important we hold the 70.5 level for the bull case to happen. The way gold's acting, I view that as a possibility. Here's your ascending triangle, 73.80 high. The dollar's made new highs, and Aussie hasn't made a new low since back in September. So that's 70.20. They'll call it 360, and this is how people get the possible target of 77 down the road. Is based upon this ascending triangle. So this is really the key area. If you're bearish, you start to have momentum building, but you need to close under 70.50. So give me a Y if you're with me on the Aussie. Actually has better structure. Kiwi has a much better structure. So looking to buy potential pullbacks in the Kiwi, maybe down around this 167, this 67 level, possibly as deep if the dollar gets going at 66. But Kiwi looks to be a buy. The commodity currencies look okay to me. But I want to get to the CAD because that could be setting up for something this week. This was our first RSI divergence here in a while. And I was talking about a 140 potential target. Had this 3 drive line that we blew through right away, but potentially have another 3rd drive to a top formation setting up here. Very high risk trade. This will tie in with some type of potential low in the crude oil market. So here's drive 1 confirmed. Here's drive 2 in this big pullback that we had Friday in Canada, diverging, and drive 3, just eyeballing it, hits this line around 40.25. If we're under 70, you could probe it. So potential 3 drive to a top, setting up in Canada, along with a potential low in crude, very contrarian trades. But at least now we're starting to get some technical divergences there on the 1 hour. And even on the 4, we're beginning to diverge. So watch this area for potential short at 40.30. And then if we could take out 38.60 from 40.30, would give us 136, 137. Starting to look for potential pullback targets in Canada up here. I know a lot of people are saying 150. I'd be just as careful being long Canada right here as being short crude. It's not a 5-star trade, but I think that the whole world is bullish Canada. The whole world is bearish crude oil. So what is most obviously eventually is obviously wrong. So alert some type of high there. Give me a Y if you're with me. Taking a look at a few other crosses that we pay attention to. I talked about the EuroCAD down here. You know, I got out early. We're still moving up. Don't chase it. Actually getting up to this line, I had drawn, diverging. So just like the Euro Pound is starting to look like it's due for some type of pullback, EuroCAD looks the same way to me. Euro Aussie was also something I talked about down here. Starting to look a little heavier, maybe one more push up in Euro Aussie before we get a pullback. If you're with me. So big picture, the forecast was spot on for a failing rally in the dollar. I view this dollar trade as a very contrarian trade. The whole world loves the dollar. It's going to continue to have a bull market in the dollar. And I believe that what happened last on the ECB, which is something you were alerted to, never should have been caught long the dollar, and there were lots of reasons to buy. It actually gave you a buy point in the euro down around that 105 level into Draghi. So I'm going with that scenario that we're now in a C wave or 3. I don't rule out a little bit more of a complex structure in the dollar, that this could just be A, and then we get a B, and then one more rally attempt, but it looks vulnerable to me, and I'm not going to be interested in the long side of the dollar till we get down to at least equality, which is about 300 points from here. That could take us down to 96.5, 96 even. And that's a wrap up. I hope you were able to take advantage of the dollar pop, which was forecasted and got positioned for the failing rally. Into the Fed, after the Fed, the short side of the yen. New trades to be alert for in the coming days would be some type of low in the crude oil market, along with perhaps a 3 drive to a top formation that's setting up here in USD CAD. And let's just ride the weak dollar, and when the dollar strengthens, look to sell it. And this has been the strongest currency. We'll see what happens up against 40.25, and I'll be back with you on Wednesday. Any questions before I say goodbye? I want to thank you for your attention. I also want to thank you for acknowledging the analysis when it's right and when it's wrong. And definitely last Monday you were set up to take advantage of both the dollar rally by being long the yen and knowing that it wasn't going to be a failing rally, which took place and is manifested since Thursday. And with that, good hunting. I'll be back with you Wednesday.